8 things you can own that will elevate your economic status. What constitutes a successful financial life implies something different to each person. For some, it may mean engaging in philanthropic activities, while for others, it could mean having enough resources to live comfortably and retire debt-free. However you define it, financial security sure does lift the pressures and stress that come with life. To guarantee your financial freedom and raise your economic status, one thing you can do is own valuable assets. However, too many people remain in the dark when it comes to personal finance and the topic of investments. As a result, they cannot see the potential of assets and are simply choosing to do nothing with their money. From real estate to business ownership, you can acquire assets that will help you build wealth. Hi, and welcome back to another video of Finance Sense, where we cover all the latest trends in the financial markets and the economy. Whether you are an employee or self-employed/entrepreneur, this video will shed some light on 8 different kinds of things you can own that will elevate your economic status. Make sure to hit that thumbs up, and if you're new to this channel, subscribe and turn on the notification bell to stay updated with our videos. Now, let's get on to the video. Number 1. Stocks. A stock is a financial instrument that grants ownership of a portion of a company or corporation to the holder. A share of the company's assets and income is allocated to the owner based on the owner's initial investment. A share is a piece of stock owned by an investor. To protect investors from fraud that could cause them to lose their investment, official regulations governing the process of purchasing and selling stocks are in place. The stock market is where stocks are most frequently bought and sold. Today's investors may choose from various online stockbrokers that make trading stocks and other investments simple and convenient. However, you must be diligent and must recognize reliable brokers. Online commerce is also available for individuals to buy and sell. The returns are typically enormous for people who have made long-term investments in stocks, especially if a corporation is performing efficiently and the stock value is steadily rising. This also implies that the dividends will be profitable. However, stocks are susceptible to several unforeseen market movements that could negatively impact them. But generally speaking, stocks can help you increase your wealth. Since there is no way to know how a company's future decisions will affect its share price or dividends, it is a sensible choice to diversify or invest in various stocks. Number 2. Real estate. Real property, sometimes known as real estate, is essentially land and anything to which it is permanently tied and is one of the investments with the highest rates. Real estate could be undeveloped land, commercial, industrial, or residential property. Many individuals have built their wealth through various activities, including purchasing and selling real estate, developing residential and commercial rental properties, farming, and others. You are more likely to profit when you acquire a property and keep it for a while rather than just buying and selling, because its value tends to rise with time. If you purchase land in a largely uninhabited region, after a few years, you may discover that more buyers have moved there and developed the area, increasing its value. It is rare to find properties that are losing their value unless it is in a neighborhood with abandoned buildings. However, the land it's sitting on will continue to increase in value even under this circumstance. Investing in real estate may be a great way to build wealth, but like any investment, there are potential drawbacks that should be evaluated and understood beforehand. Real estate bubbles have been reported in several regions of the world. While they typically only last a short while, they can nonetheless harm this asset. Additionally, the market is full of fraudsters and con artists who might cause losses if sufficient diligence is not exercised. Despite that, real estate continues to be a profitable and friendly means of accumulating wealth for newbies, thanks to the availability of detailed research and the existence of regulations designed to protect you. Number 3. Bonds. A loan made by an investor to a debtor is one way to define a bond. The borrower may be a single person, the public, or a business. But the borrower is typically a firm or the government. The maturity date, interest rate, and other pertinent information are always specified when it comes to bonds. Assets that can be traded also include bonds, guaranteeing the lender a steady stream of money. Because the interest rate is set in advance and never changes, you always know how much money you'll receive upon the bond's maturity. This guarantees that your wealth will continue to increase. However, before purchasing a bond, you must complete your research to see if it is a good fit for your investment portfolio. Number 4. High Yield Savings Account. Generally speaking, the interest rate on a high-yield savings account is higher than the rate on a standard savings account. High-yield accounts, however, carry tremendous risks than standard accounts. Everything in our world has a certain amount of danger, but the prudent course of action is to recognize that risk and take steps to reduce it. You may expect a high rate of return on your investment in this asset, and the more you invest, the better the return. However, the rates will undoubtedly change during economic downturns, but you will still receive a significant return. Investing in this asset requires extensive research to identify trustworthy market participants that have stood the test of time and established a solid reputation in the industry. By doing this, you'll have a low chance of getting scammed and losing your money. A lot of people have found financial security through high-yield savings accounts. While you might feel safer with a regular savings account, the rewards are relatively low. If you want to become financially independent, take a chance and open a high-yield account. Number 5. Collections. Collecting things, especially vintage items, is a popular pastime many people enjoy. Even though the collection process costs money, you'll be happy with the results when it's time to sell them. However, the significant risk in this situation is that you cannot tell whether the assets or items will rise in value after a few years. Doing some research ahead of time will help you determine the approximate value of an item you have. This mainly pertains to first-time collectors. This task is generally easy for experienced collectors since they have accumulated knowledge and insight along the way. The following are some profitable collections you could start. 1. High-quality art pieces. The cost of buying paintings can be high, but if you choose the perfect one, you'll receive your money's worth. Keep an eye out for well-known artists as well as up-and-coming ones. 2. Vintage cars. For those who enjoy getting their hands dirty, acquiring a classic automobile to restore and resell at a profit is a great hobby. This collection is trendy despite its high cost. 3. Aged wine and alcohol. High-quality alcoholic beverages that have been stored for a long time and are left to age are excellent things to collect. However, these are only available in a limited supply. All these are examples of the kinds of things that individuals collect. Other assets that will generate profit include silverware, rare home goods, clothing, jewelry, and so on. Number 6. Certificate of Deposit. A bank will offer a certificate of deposit to an individual who deposits money for a predetermined amount of time at a predetermined interest rate. If you have money sitting around that you won't need for a while, investing it somewhere is an excellent approach to make it grow in value. It would be preferable to put the money somewhere that earns interest than to let it sit in a checking account doing nothing. There is little to no risk involved, so the interest rate is often not exceptionally high for this type of investment. You can buy the certificate of deposit from the bank of your choosing. Make sure the bank offers insurance, as this will ensure that your money is safe should the bank ever fail. The bank will pay you the agreed-upon interest when you deposit the funds. Then, you will receive your initial deposit plus any accumulated interest after the deposit term expires. With the help of this asset, you can generate income and you can choose how much wealth you want to accumulate based on the quantity of money you invest and for how long. It is important to remember that, like any asset, changes in inflation rates have impact on the interest rate on cash deposits. A certificate of deposit may lose some of its appeal during periods of exceptionally high rates. Number 7. Mutual funds. When several investors combine their resources under the direction of a single fund manager, the resulting investment vehicle is called a mutual fund. It's also used to describe a collection of assets that are jointly managed and the profits are distributed fairly. Stocks, treasury bonds, and bills, and other assets that increase in value make up the majority of the investments. Mutual funds make fantastic investments because of their diversity and are a great way to boost your wealth. One benefit is that they are simple to obtain through various brokerage companies. Also, there may be tax advantages for investing in this asset depending on the investment instrument used. Although, it's important to remember that investors have no say over where or how their money is invested because they don't really own any of the assets in question. Lastly, number 8, private equity. Private equity refers to capital investments made in privately held enterprises. Investors prefer private equity over public ones because it provides higher profits. You can invest in private equity to acquire a stake in a private business activity. This can be a startup or an established company. And if a company is later sold, the investor will earn a cut of the profit. The investment required for this equity is relatively large, and the investors either need to be accredited or venture capitalists. It is risky to put money into a company you have not founded, so you should do your research thoroughly before making any commitments. Successful private equity investing, however, may pave the way to a prosperous future, provided you choose your investments wisely. Hi, thanks for making it to the end of this video. I hope you learned something valuable, and if you enjoyed it, please hit like and subscribe as it would help us extend our reach to many audiences. Also, make sure to leave your thoughts in the comment section down below. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Stay tuned for the next video.